You may have heard that there are certain types of homes you should never buy, and realtors will often do a great job telling you the issues associated with those types of homes. But what you don't know is why it's problematic from a mortgage standpoint. Some of these homes are just not financeable. So let's go back through this really popular topic and look at it from the mortgage side. In my 23 years as a loan officer, I've seen a lot of home buying mistakes. I want to help you avoid falling in love with a home that you just can't buy. And I certainly don't want you to lose money or your deposit by buying something that is completely unfinanceable. So let's dive right in. The very first home that you want to pay attention to is anything with structural issues. I'm talking foundation issues, excessive water issues, or termite or pest infestations. All right, so a realtor is going to show these things to you and let you know that there could be extra inspections necessary or extra costs associated with fixing it. But for me, from a mortgage standpoint, the lenders are going to require these things to be addressed. All right, so they are going to have to meet FHA, VA conventional standards, and they may require a renovation loan, which is more expensive and takes a lot more time, and there's so much more involved. Okay, so you really want to pay attention to any home with a major foundation issue. Just because you might see some mold on the wall or some drywall that's misshapen, that doesn't mean that's all there is. Again, a realtor is going to show these things to you and talk to you about having a handyman or a contractor coming out and repairing them. But from a mortgage standpoint, we're going to need proof that the entire situation has been addressed. And so that does mean repairs, but it also means re-inspections, and that's more and more money out of your pocket. And if it's just not surface damage and you open up that water damage area and now you have mold and other issues, that's going to have to be fixed from the inside out, and it's going to have to be documented with a re-inspection. All right, these termite and pest infestations. Sometimes it's not a big deal. You just have a little termite damage on the corner of an exterior wall, right? That happens. I'm from Florida. We have seen that so many times. But if you get into a full infestation, like this is a problem. I have seen people have to tent homes before. It's a big, big deal. So lenders do often require a clean pest or termite inspection. So know that that can happen as part of your process. But more specifically, the appraiser is going to comment on the condition of the home. And if the appraiser notices any kind of damage like this, it will have to be inspected, corrected, and then re-inspected again to prove to the lender that everything is satisfactory. Let's talk about unpermitted repairs and DIY projects. These can be the kiss of death, and here's why. The lender wants to make sure there have been no code violations and there are no safety hazards. And did you know that the lender performs all kinds of background checks in the mortgage process? The lenders are looking for title issues. They want to verify that there is a clean title that's going to pass from the sellers to the buyers. So if there are any disputes or encumbrances, and that means like liens from contractors who didn't get paid, or any type of city or county things that are put against the property for violations, those things are going to have to be satisfied. All right. Also, the lender wants to know that the legal boundaries and the legal description hasn't changed. Typically, this is accomplished with a survey, but if the current homeowner did some sort of DIY fence or put a pool in or some sort of structure in the backyard and didn't pay any attention to the boundaries, and now your fence is 6 feet into the neighbor's yard, that can be problematic, and that can actually result in a delay in closing or no closing at all. So these things are very, very important, and important for you to know too if you're thinking about doing some DIY repairs on your home. Zoning and permits, right? Whenever anything is done on a home, it needs to comply with local zoning and permitting laws. And when an appraiser comes in and inspects a home, they're looking at all kinds of things, and they can note these types of things. They may note that there was a back Florida room, we call them a Florida room from Florida, but like a back screened in porch that is now turned into fully functioning living space, but the tax records don't reflect it. Okay, this is where we get into problems, and that's where zoning and permitting comes into play. Let's talk about some environmental factors, and the number one being flood zones. This is a topic that's near and dear to my heart for two reasons. I'm from Florida. I used to live on the canal, and it's ironic that I was never in a flood zone because our house set up high enough. I mean, I was like 6 feet above sea level, but that was high enough in our area. And because of the way that the water systems work, there was a very low risk of our canal ever flooding, and it really never did. So that was awesome. But recently, the Asheville, North Carolina market has seen incredible flooding and incredible devastation in areas that would have never been zoned a flood area. So you want to pay attention to flood zones and poor drainage when you're looking at properties. This is a real thing. So flood zones are important from a mortgage standpoint, because if you're required to carry flood insurance, that is now an extra part of your monthly payment that we have to count against you. So if you are already really tight on your debt to income ratio and just trying to squeeze into the house that you want to buy, now if we come and say, hey Joe, hey Susie, you are in a flood zone, you're now going to need flood insurance. Sometimes that's not cheap, and it can be $50, $100, $150, and even more per month that's now going to get added to your debt to income ratio. So it's problematic from a qualifying standpoint, but it's also a real thing to think about whether you want to be in an area that is, that has the potential to flood, if you want to absorb that kind of risk. And then the poor drainage, I probably don't have to say much more than talk about Asheville, North Carolina, but someone that used to work on my team, she lived at the end of the cul-de-sac in her neighborhood. She lived in the middle of the neighborhood at the end of the cul-de-sac. And you would think, oh, that's awesome, like super private, super quiet, whatever. Well, the problem was behind her, behind that neighborhood, was an entire commercial area. And the property, like that whole block, was sloped behind the building, which was her backyard. And I've been to her home before, and I've been there when in dry season, and I've been there in the rainy season, and I could not have walked through her backyard without literally sinking to my ankles or my calves. The poor drainage from the other properties around her completely impacted her backyard. And she fought and fought and fought with the city for them to come and do something about it. And to this day, I think she's still fighting. And so when she's in Florida, so when hurricane season comes and we get tons of rain, she knows what she has to be aware of, and she has a plan in place on how to deal with that. But that's something that she didn't know about when she bought the house. So pay attention to these issues. They really do make a difference, and to you, and also from the standpoint of getting financed. Okay, let's talk about the age and the design of a home. Let's start with the age. Old homes with outdated systems or asbestos and lead-based paint, okay? Real things. If you don't know about these, listen up. So it's so cool to see these historical neighborhoods and these just grand, like a Victorian home or what have you. I think they're amazing. But when you get inside of them, sometimes the house isn't just 2 years old. All of the systems are functioning on a 200-year-old basis. And why that matters on the mortgage side is because you might buy it knowing that you're going to have to make those repairs over time, right? Of course, those things are going to give out. But again, I'm going to go back to the appraiser, and I'm not down on appraisers, guys. This is just how the process works, okay? The appraisers are going to comment on every one of those systems. They're going to comment on how old they think they are, what kind of condition they're in, and any problems that they see. And let's say the heating system is really, really old, like decades old, right? They may comment on that. And the lender might say, depending on the loan that you're taking out, that's too old of a system, or it doesn't have enough life left in it for us to feel comfortable giving you this loan. And they may require those systems to actually be replaced before closing. So just pay attention when you're checking out these really cool homes that are old and historical and just like so awesome. You need to really pay attention to the inside, to the guts of the house, okay? The other thing is asbestos and lead-based paint. I'm going to specifically speak to lead-based paint, but for both of these products, there was a time period where these were completely acceptable. And so for lead-based paint, After 1978, that could not be used any longer in the residential properties because there was a lot of health risk associated with it. But if you buy a home that was built prior to 1978, you're going to get a lead-based paint disclosure, and if the appraiser finds any kind of lead-based paint or any kind of paint chips in the property, you're going to have that diagnosed based upon the lender's guidelines. So, for example, did an FHA loan in the last couple years, and there was chipping paint in one of the rooms, and it was built prior to 1978. So we had to have that repaired, but it had to be inspected, repaired, and re-inspected by someone who was properly certified. And I went in the guidelines with FHA and found all of the fine print, and it wasn't a problem for me, but what I forgot to tell you is that these folks started with another lender who couldn't close the deal because they had no idea how to handle it. They just said, oh, there's lead-based paint, we can't do it. And that's not true, but it was a lot more expensive than you'd think to remedy that. We did, it worked, but they had to pull their loan from a company that had no idea how to handle it. I had to start fresh and then go and do all of the repairs. So it did delay closing. Fortunately, the sellers were very considerate in the process, so they didn't lose any money, and everybody was willing to give it a few extra weeks. But these are like real things. This stuff happens. Okay, let's also talk about these unique and unusual designs, right? Again, like I love a barn dominium. That's kind of a thing for me and my family. I would love to have one. How about you? Is there like a really cool shaped or structure type home that you'd like to own? Put it in the comments. I'd love to hear about it. But here's why it's problematic. All right, a realtor might tell you you have a limited market to resell it to, and that can be true, right? But from a mortgage standpoint, just even buying the house can be problematic because we may not be able to find comparables. And what I mean by that is when the appraiser goes out and looks at your property, they're also comparing it to at least 6 other like properties within a mile of it. That's the guidelines. That's where they start. And so if you're buying some octagonal shaped property, if you want to buy a log cabin in Florida, that might be really hard. And if the appraiser can't find comps and can't do the job, the lender may not accept the appraisal. Okay. Let's talk about the log cabins because that's a real easy example. If you're in Asheville, North Carolina, if you're in the Great Smoky Mountains, if you're in places like that, buying a log cabin is typically not a problem. There are so many log cabins tucked up there in the mountains that you just slide right in and we can find plenty of comps. But if you buy in Florida, if you buy a log cabin in Florida, again, not a lot of comps there, and it just might not work out. So that's what I want you to think about. Buy something that is usual and customary for the area, and that's going to protect you as you buy and get your loan with the lender. Here's some financial pitfalls that you could encounter. Buying an overpriced home in a hot market, right? I know that sounds awesome, but here's the mortgage impact. If you overpay for a property and it doesn't appraise for the sales price, we use the lower of the sales price or appraised value, and then you have to figure out how to make up the difference. You can bring that in cash. We don't really care as the lender, but the seller either needs to come down on the price or you need to come forward with the money to make up the difference, but it will always be the lower of the sales price or the appraised value. That's what the lender is going to use for valuation. Let's talk about HOA heavy properties. This can be very problematic. Remember how we were talking about flood insurance and how it's an extra expense that gets added to your debt to income ratio? Same thing applies with HOA fees. So if you're buying in a neighborhood or if you're buying a condo or something like that, where there are HOA fees, know that that gets added to your monthly payment. And we have to count that against you when we are pre-approving you. The lender also cares about the health of the HOA. If you have a homeowners association that isn't healthy, meaning people aren't paying their dues, they're not properly insured, they don't have the right kind of reserve set aside, you may then have trouble reselling that property because lenders do care. We look at all of those details. And if you have more questions about properties with HOAs attached to them, I have some other videos that I've made and I'll link those in the description for you. You can check those out. Let's talk about properties that have a lot of hidden costs. And to start the list, we're going to talk about foreclosures and short sales. First of all, there's a lot of extra fees associated with these properties. They are in a legal proceeding with the mortgage company. And so attorneys' fees are racking up as the foreclosure and short sale process are playing out. That is going to get added to the cost of the payoff, i.e. purchase price. Also, these properties aren't always in the best shape. I have seen with my own eyes a short sale that had 0 cabinets in it. Why would it have 0 cabinets? Because the previous owners said, I put those cabinets in after the mortgage, I paid for that with my own money, and I'm taking those with me. And then the new buyers had to put in cabinets before they could even close. So that way everything was functioning in an above average condition for the lender's guidelines. So there are some super strange things that people do when they get financially strapped. And you may end up with a property that has just a lot of repairs needing to be made, or that has a lot of additional fees that have been added to the purchase price. Properties with encumbrances or liens. If there are tax liens, mechanic liens, anything, judgments, all kinds of things legally attached to the property that you want to buy, they have to be satisfied before you can move forward. So the first thing you do is you reach out to the person or the company that has that lien or encumbrance on the property and speak to them. You speak to the seller and hopefully they'll work it out. However, if they don't, then that means you may have to pay for some of this stuff and you may not want to, or you may not have budgeted for those things. Also, flipped properties. Okay, when we're talking about flipped properties, we're talking about homes that have been purchased and put back on the market within weeks or months of the original date. Okay, and so typically somebody buys it, they make some improvements, they have increased the property's value, and now they're offering it for sale. Well, why do lenders care about this? The lenders don't want prices to be artificially inflated for just a little bit amount of work. Okay, they're really looking out for the borrower and they're looking out for themselves. If you want to buy one of these flip properties with an FHA loan, there's some things you need to know. First of all, if it's been more than 90 days since that property was originally purchased and it's back on the market, it's a no-go. FHA will not do it. Then if it's between 91 and 180 days, which is roughly a 3 to 6 month period, you can go FHA, but you will need to get 2 appraisals. And as a borrower, you're only allowed to pay for 1 of those. So from the very beginning of the transaction, we need to identify this time period. So that way we can either ask the sellers to pay for that second appraisal, the realtors to pitch in, and ultimately the lender can actually help as well. But the borrower can only pay for 1 of the 2. In addition, the lender might require some proof of the improvements that were made. They don't always just take it at face value that the property has appreciated in that short period of time. If you're going conventional, there are no real specific guidelines on this. However, a lot of the lenders will superimpose some restrictions here. It's very, very common for them to require a second appraisal or a minimum time frame on any property that's recently been flipped. So here's the bottom line. You just need to understand that there are risks associated with buying these kinds of properties. And it's not just financial, where you may have to pay off a lien and encumbrance or bring it to current standards, but you just may not be able to get financing depending on the condition of the home that you're buying. The most important thing for you to know is that you should start with a loan officer when you're looking to buy a home, especially in these kinds of situations. You need to go over your complete financial situation with them and be honest about the kind of property you want to buy. That way, we, the loan officers, can do the homework and make sure that you understand all of the caveats and you know exactly what you can and can't do. There is nothing worse than putting some money down for due diligence or for escrow and losing it because you didn't know any better. All right. Did I cover everything in this video? I hope you found value in this video. If you have any more questions, put them in the comments below. I'll personally answer them. I also have some resources that you can take advantage of if you need some more information. You can schedule some time on my calendar and we'll meet one-on-one. You can also sign up for my free weekly emails where I share mortgage tips and home tips. And finally, I do have a free smart home buyer's guide that you can download, and it'll give you all kinds of great information on the home buying process and what you need to be looking for. Thanks for watching, and I'll see you on the next video.